Hi everyone, welcome to Single Value. So we've got a new SPAC deal. This is a Colonnade Acquisition Corporation, and it's looking to merge with a new Lidar play called Ouster. And this is really moving the share price. Yesterday it moved up 37% to $13.83, and before hours is looking quite immense. So and even with this big movement, I still see a lot of potential ahead of this merger. So, you know, like, stay tuned, and we're going to look at the facts and figures and hopefully come up with a valuation that we kind of think might be fair. So in terms of current valuation for the SPAC itself, it's $345 million. And as it was announced yesterday, as it says, SPAC Colonnade Acquisitions stock rockets after merger deal with Lidar sensor maker Ouster. And they are looking to form a merger that would be about 1.9 billion in valuation, with around a gross proceeds of $300 million. So at that 1.9 billion, we still have to account for this 37% increase, which would give us a valuation, if you give me a moment, of about $2.6 billion. At 2.6, how we're looking compared to like Velodyne and Luminar, the two big Lidar plays recently. 2.6 means in terms of Velodyne, and just in terms of valuation, we're looking at just slightly below half of what they're worth right now, slightly above half of what they're worth right now, and definitely by far undervalued compared to Luminar Technologies. And like, I'm sticking with firstly the video I made about Velodyne, that firstly these guys are already undervalued compared to Luminar, and these guys are extremely undervalued and compared to these two, and very, very undervalued compared to Luminar, of course. So now that we look at the valuations and we go, okay, well, in terms of valuations, Ouster is by far the cheapest. So we have to look at what this company is saying in general. So I think it's probably a good fit to talk about their tech. So in terms of their digital LiDAR, they are, as I say, outpacing the current market. They are keeping up with Moore's law, which is basically the transistors in a chipset doubling every 2 years. And as you can see this chart, they are matching what they say. And they've got these chipsets out 2017, 2019, 2021. So every 2 years, they expect a new chipset to come out, which comes with a dramatic performance increase. And then they actually expect another one in 2022. So before that, they were going 2 years, 2 years, 2 years, and then after that, 1 year after. So these guys, in terms of performance, technology increases, they are performing really well. They've got 29 patents that are granted, and that's from 20 different invention families. And they have 100 plus applications pending worldwide. And as it puts, founding technology, revolutionary micro-optical system, digital LiDAR architecture, data processing circuits, and LiDAR camera convergence. So in terms of where this company sees itself competing with Velodyne and Luminar, like literally they actually made a slide that actually talks about the good points of this company and why they're better than the other two. So very, very interesting that a company did this. So in terms of where they see themselves, Ouster's well positioned relative to recent LiDAR opportunities. So even that itself, I'm feeling very confident about this company, that it sees itself outpacing the competitors. So they see unmatched technology, one common architecture with two flexible platforms, high performing mechanical and true solid state technology, virtual unlimited software defined customization. Low cost customization enables rapid scaling across industries, highly scalable manufacturing driven by simplified digital architecture, strong unit economics rooted in Moore's law. So this company is like keeping pace with Moore's law, and you know, that speaks a lot of volume in terms of how high their output and performance is. So as I put Velodyne and Luminar. They say less efficient exotic semiconductor process, highly reliant on future products yet to be commercialized. So let's be clear. This is what they're saying is bad about these two companies. So they're saying these guys are less efficient. They're highly reliant on stuff like autonomous driving, auto first mentality, finite customer base, so limited customer base, low penetration outside of the auto industry. So firstly they're going, okay, well, these guys are great, but they are so limited in their play that they're very limited in terms of where they could go. Whereas Ouster goes, we have 4 different sectors that we're going to do very well in, whereas these guys are too focused on 1 or 2. Alright, so and then they assume high margins in auto. Again, they're saying these two companies focus too much on auto, assume high margins, and are really dependent on, autonomous driving taking off, dependent on future end market ramp. So yeah, when we just consider those factors, it really goes, hey, this company's really considered its position, and it goes, we're substantially better than these two companies that you retail investors highly rate. So we got Velodyne, which we rate highly, and we've got Luminar, which we rate even more highly. So you look at this situation and you go, wow, basically this company just came in and went, yep, these two companies are so limited in what they do, they assume too much, we're substantially better, and our valuation at the current situation is just above that 2.5 billion mark. So yeah, I definitely see an enormous potential in this company going forward. Of course, we can look at the recent performances. So they acquired 250 new customers this year, 143% revenue growth expected from 2020 to 2025. We can actually look at their revenue projections compared to the other two companies as well. So we're looking at, currently they're expecting 19 million in revenue, whereas with Luminar they're expecting about 15 million, and then for Velodyne their revenue is substantially higher at 101 million. And then we can go to the forward projections. In 2024, Velodyne expects 684 million, and in 2024, Luminar expects 400 million. So this kind of really brings some great questions. Like Velodyne firstly expects 50% more revenue in 2024 than Luminar does with their 400 million, yet Luminar trades at a substantially higher valuation at 12 billion, ahead of Velodyne's 4.6 billion. And then we look at Ouster's projection for 2024, and it's at a massive 800 million in terms of expectations for 2024. Of course, these are just expectations and estimates, but these guys are the very same guys that go, hey, we can specialize in industrial, smart infrastructure, robotics, automotive, and others, So they're going, we've got 4 main categories which we can service, which is going to bring us tremendous revenue once this kind of like area kind of really takes off. Whereas they're going, Luminar, you're so limited that by the time you take off, you're doing 400 million while we're doing 800 million. And Velodyne, you've got some extra applications in terms of where you can make your money, but even then you're 684 million, and like our 800 million is still blowing you guys out of the water, which is really interesting. That especially in 2025 they expect 1.5 billion in projected revenues, whereas you've got 2025 for Luminar at 800 million. So these guys are almost doubling that projection in 2025, though we don't have one for Velodyne, but you'd expect Ouster's is still going to be higher by quite a margin. So in terms of that, yeah, what's not to like about Ouster? They've got some brilliant tech. Their revenue expectations are substantially higher than the other two. And the current valuation is substantially lower. I see this pricing running up very quick and very high. if we go, these guys will go to probably about close to $25 to $30 just to match Velodyne right now. But I expect this company to outperform these two, at least reaching a midpoint of even $6 to $8 billion, which would probably give this company at least a 2 to 3 times upside on the current pricing. So yeah, like these guys could easily be trading at close to $40 to $50 in a very, very short time frame, assuming the whole thesis stays relevant. And why is that the case? It's because these industries are growing substantially. So if we look at the current situation that these markets are in, they're growing really, really quick. So as these guys expect, customer forecasts expected to anchor revenue projections through 2025 with a $4 billion cumulative opportunity, which is extraordinary. And here's the different applications they have. So currently they have 450 customers, and it's such a well diversified space. Like there's industrials, which makes up this smaller segment. Then there's smart infrastructure, which is slightly bigger than that. And then it's robotics, where this company is really performing really, really well. And what's equally matching it is automotives as well. So whereas the other two companies are really focused on automotives, this company is really, really focused on robotics as well, and industrials and smart infrastructure. Which kind of makes it a very, very diverse space and actually lowers the risks of how they gain their revenues. So I really like how this company is going about their business, and it potentially gives them a huge advantage because they're working with the focus of 4 areas, while the other two companies are working with the focus of just one area. And yeah, these guys... definitely, there's a lot to like about these guys in terms of where these guys are headed. And yeah, they keep a good low cost. And yeah, as we recently heard with Apple announcing their cars, they're also looking at Lidar technology. So Lidar is being used by a lot of car companies. Even though Tesla is like, Lidar is not for them, everyone else is saying Lidar is for them. And here's the projected revenue that they're expecting for the current market. They're expecting this to be a $9 billion market in 2025. But what's more extraordinary is that they expect that to grow to $50 billion by 2030. So in the space of 5 years, this increases by more than 5 times across those 4 key markets. So it means by 2030, this company could be a massive giant. If you are willing to hold for 10 years, this could be the potential next big play. When you look at those articles of like, hey, if you've invested in Netflix or Amazon or Tesla early in its day, you would have made this many tens of thousands of % return. And this potentially leads that same route, that because they are in a really good space and are growing very well, and also they've got the technology to back it up. That doesn't mean that Velodyne and Luminar doesn't do well as well, because I mean, a massive industry going forward, that these Lidar companies are going to be in massive demand. It's kind of like vaccines right now. Not one company is going to rule them all. They're going to share the market, and everyone's going to do very well out of it. But you've got a company that is focused on industrial, smart infrastructure, robotics, and automotives. So yeah, I definitely say the potentials of this company, there's low risk in the revenue base because they're so diversified, and there's some massive potential out there for this company. Let me know what your thoughts are of this company. Do you like it or do you not like it? How does it compare with the other two? If you have any questions or comments, just write those down below. Until then, good luck investing, everyone. Like, this is certainly one that I am very excited about. And yeah, I think even at the current pricing, it's risen quite a bit, but I mean, that's expected of these plays. The minute something big happens, boom, the share price goes up. But I see a substantially higher upside at the current pricing. probably even 2 to 3 times more at the current pricing. So I think buying at these current pricing, even at the $15 mark, still worth buying. Hold it long, at least till the merger. I think you'll make some good gains. At least that's what I think personally. You may see differently. Yeah, until then, yeah, good luck everyone.